The Bitcoin network is built on the principle of proof of work using SHA-256 hashing to ensure security and integrity. It consumes approximately 20 gigawatts of electricity annually, costing about $5 billion, and operates on over $25 billion worth of specialized ASIC hardware designed specifically for mining Bitcoin. The use of ASICs is critical for Bitcoin's security. If the network relied on CPU use, it could be vulnerable to attacks from tech giants like Google or Microsoft, which have massive CPU resources. Similarly, if it used GPUs, AI data centers might pose a threat. However, the network's reliance on SHA-256 ASICs ensures that these other types of semiconductors cannot compromise its security. This design makes Bitcoin not only the most powerful monetary network, but also one of the most robust computer networks globally. Its immense computational strength, measured at 600 exahashes per second, ensures that even the combined power of all other computer systems worldwide cannot threaten its security.
The Bitcoin network is engineered on the principle of proof of work, utilizing SHA-256 hashing to ensure its security and integrity. This approach involves the network consuming approximately 20 gigawatts of electricity annually, at a cost of about $5 billion, and operating on over $25 billion worth of specialized hardware. This hardware consists of ASICs, which are purpose-built to perform the complex calculations required for Bitcoin mining. The choice of using ASICs is critical for maintaining Bitcoin's security and resilience. If Bitcoin relied on CPUs, the network could be vulnerable to attacks from tech giants like Google, Facebook, or Microsoft, which have vast CPU resources at their disposal. Similarly, if Bitcoin used GPUs, the network might be at risk from AI data centers, which are equipped with extensive GPU resources. However, the specialized nature of SHA-256 ASICs means that these other types of semiconductors cannot be repurposed to undermine the Bitcoin network security. This design makes Bitcoin not only the most powerful monetary network, but also one of the most robust computer networks in existence. The network security is measured by its hash rate, which currently runs at an astonishing 600 exahashes per second. This immense computational strength ensures that even the combined computing power of all other computer systems worldwide cannot threaten the integrity of the Bitcoin network. The engineering behind Bitcoin's proof-of-work system creates a decentralized and tamper-proof ledger. Each transaction is recorded and verified by thousands of miners around the world, making it nearly impossible to alter any part of the blockchain without consensus from the majority of the network. This decentralized verification process is what makes Bitcoin unique and secure compared to traditional financial systems. Bitcoin's use of proof-of-work and SHA-256 ASICs forms the backbone of a network that is both secure and resilient against potential attacks. This design ensures that Bitcoin remains the most powerful and secure monetary network in the world, maintaining the integrity and trust of its users across the globe.
Subscribe our channel and press the bell button to get our video notification. And like the video.
To launch a successful monetary network, it must be ethically sound with robust engineering and sound economics. Bitcoin exemplifies this with its fixed supply of 21 million coins, a policy that is extremely difficult to change. The transparency of this supply and the network's conservative approach ensure stability and trust. The network's economic policies are also fiercely protected, as demonstrated by the block size war's bitter disputes over whether to adjust the network's bandwidth and scarcity. As Bitcoin has grown, it has become even more resistant to changes in its economic structure. Ethereum has frequently altered its economic policies through multiple hard forks, changing its approach around half a dozen times. This frequent modification highlights Bitcoin's commitment to maintaining a stable and transparent economic model.
To successfully launch a monetary network, it must be built on principles of ethical soundness, solid engineering, and robust economics. Bitcoin stands out as a prime example of this approach, thanks to its unwavering commitment to a fixed supply of 21 million coins. This supply cap is a fundamental aspect of Bitcoin's design, and changing it is extremely challenging, reflecting a conservative and stable economic policy. This fixed supply is transparent and well understood, ensuring that the network's monetary policy remains reliable over time. Bitcoin's commitment to preserving its economic model is evident from historical events like the block size wars. These were intense debates about whether to adjust the network's bandwidth or second-order scarcity, reflecting the network's deep conservatism in economic matters. As Bitcoin has expanded and matured, its approach to economic policies has become even more resistant to change, safeguarding the integrity of its monetary system. This contrasts sharply with Ethereum, which has altered its economic policies multiple times through hard forks. Ethereum's approach has seen several adjustments to its supply and other economic parameters, reflecting a more flexible but less stable economic model. Over time, Ethereum has changed its economic policies about half a dozen times, which has led to variability in its network's monetary rules. Bitcoin ES stability and resistance to change are key aspects of its strength as a monetary network. Its fixed supply and conservative economic policies provide a predictable and secure foundation, distinguishing it from other cryptocurrencies that frequently modify their economic structures. This adherence to a stable economic model is a critical factor in Bitcoin's continued success and trustworthiness as a global monetary network.
It's wise to allocate a portion of your portfolio to Bitcoin if you have funds that you can commit for at least 4 years. Bitcoin is considered digital property and can be a key component of a long-term investment plan. A well-rounded long-term portfolio might include several types of assets. You could invest in rental real estate or other properties intended to serve as a store of value over time. High-quality stocks that you believe will remain strong for decades are another option, or you might choose a broad market index like the S&P 500 for diversification. Collectible items or trophy assets which you plan to hold for your entire life also fit well into this category of long-term investments. Bitcoin stands out as the apex property of the digital age. It can be likened to owning prime real estate in Manhattan, representing the highest value in cyberspace. Just as Manhattan is a prestigious and enduring asset in the physical world, Bitcoin offers a unique, high-value store of wealth in the digital realm. This comparison underscores Bitcoin's potential as a cornerstone of a future-oriented investment strategy.
It's prudent to consider allocating a portion of your portfolio to Bitcoin if you have funds that you don't need for at least 4 years. Bitcoin, with its unique attributes as digital property, can play a significant role in a diversified long-term investment plan. You should consider other types of assets that complement and diversify your portfolio. Rental real estate or other properties intended to serve as a store of value are excellent choices for long-term stability and income. High-quality stocks, particularly those you believe will remain robust over several decades, can also form a substantial part of your investment strategy. Alternatively, investing in broad market indices like the S&P 500 provides exposure to a diverse range of companies and sectors, contributing to overall portfolio stability. Collectible items or trophy assets, which you plan to hold for a lifetime, can add a personal touch and potential value appreciation to your portfolio. These could include art, rare antiques, or other unique items that have historical or intrinsic value. Bitcoin represents the apex of digital assets. It can be compared to owning prime real estate in Manhattan. Just as Manhattan is a prestigious and highly valuable asset in the physical world, Bitcoin stands out as a premier investment in the digital realm. Its value and potential as a store of wealth are significant, making it an attractive option for long-term holdings. Investing in Bitcoin provides a way to gain exposure to a groundbreaking and transformative technology that is increasingly recognized as a cornerstone of digital finance. By incorporating Bitcoin into your long-term investment strategy, Alongside other traditional and alternative assets, you can create a well-rounded portfolio that leverages both established and innovative opportunities for growth and security.
Subscribe our channel and press the bell button to get our video notification. And like the video.